everyone's well. I hope everyone's having a good summer. This is the Cryptoverse DAO. We just finished the technicals and we're on to the news. And for all that sort of fundamental news, it's really important to see what's happening at all levels. You know, at the technical levels, we just bottomed out, right, on BTC. And we just hit sort of the 19.4 region where we seem to have some support. And we've been there before, just in December 2020. And as we sort of find support, as we see the market sort of panic and people get emotional on where the prices are, we must understand that behind the scenes, whilst things are accumulating, that's when DeFi is really building itself up. So understand that, like, this is something that's happened over and over and over again with BTC. We've seen it happen in previous cycles in 2017, and now we see it at a much higher sort of levels. You know, because why? Because BTC is becoming lesser and lesser. You can say in the proof of work model, like there's going to be less BTC overall in the next few years. I mean, there's only 2 more million to basically mine out. So currently we are at 19,359 when it comes to BTC. And overall, we're like, you can say 19 million in circulating supply. And as we know, the total supply with BTC is 21 million. So as we get closer to basically those mines, and we see those sort of mints happen, and we get to 20 million, we'll see price go back gradually up. But right now, it's bullish overall with the sort of miners and the hodlers. People have been buying these dips. If you look into like metadata, and you look into the, you can say, order books, you would see all of these orders being filled at all these levels. That's why you have these sort of support levels. Why? Because the whales accumulate at these prices, and then as usual take profits at the top. So yeah, so that's the news on BTC, and if we look into Ethereum, we've sort of set up a resistance at 1044, and overall the market cap on crypto is around $907 billion, right? It was 2.3 to 3 trillion in the last, like, you can say, year or so, and we sort of 3x downwards. But that's a good place to be, because why? Because people need to enter at good prices. We need to buy Ethereum at $1,000. We need to buy BNB at $222, XRP at 31 cents, Cardano at 42 cents. These are the kind of prices that retail and bigger whales can sort of buy at and accumulate. And as I sort of speak to you guys with the news, you will see that these levels are getting accumulated at such a rapid level. So let's start off with the news now. So the first thing I want to sort of cover is a bit of criticism that came towards Ethereum's proof of work, right? So a person by the name of Jimmy Song came out with a tweet, and it read out, "Proof of stake does not solve the Byzantine general problem. Therefore, it does not provide decentralized consensus." If you didn't understand this tweet, then you are completely unqualified to make any claims about proof of stake, right? So this is a allegation that comes through especially when you have sort of accumulating markets, bearish markets. People sort of question the decentralization of mainnets like Ethereum, like Solana, like Cardano. But recently we had Vitalik Buterin, who sort of responded to the critique. So the headline here reads, "Ethereum co-founder responds to proof of stake critics amid upcoming merge." Vitalik Buterin describes a critic notion as an unmitigated barefaced lie. So the guy says proof of stake means that we are not decentralized. So what did Vitalik Buterin reply with? So let me just zoom in here. He replies with, "Pro tip: if there is a long established tradition of people debating A versus B based on deep argument, touching on math, economics, and moral philosophy, and you come along saying B is dumb because of a one-line technicality involving definition, you're probably wrong." So he's basically explaining to individuals that you cannot come to critique just straight away on someone's words. You have to basically understand the fundamentals of something like proof of stake. and how it sort of differs from proof of work, and how it is decentralized. It's a complete voting system. So you're gonna have more of these sort of responses, especially when you have the sort of emotions in the market as we see right now. So yeah, that's the headline there, and that's Vitalik's response, right, to basically Jimmy Song. So he explains, yeah, he's like his argument is baseless, and proof of stake is sincerely decentralized, and that's how our DAOs get built. That's how we sort of vote, right? Proof of stake meaning voters take the decision making process when it comes to moving in sort of a roadmap of a mainnet or a token, and that's what proof of stake is all about. Proof of stakers have voting rights. So that's the sort of you can say article to start with. And then this is something that really excites me a little bit. Like this sort of thing really excites me because I think overall in the Cryptoverse DAO, the sort of seed rounds we've got into, they've all sort of calcified the moment of, you can say, metaverse. It came around the notion of play to earn. And then we saw sort of the metaverse tokens and everything else sort of die down, right? So Sandbox and Decentraland is all a bit down, right? And yeah, that's because there's delays. That's because of sort of what's happening with the world and sort of the adoption. People wanted to play with the metaverse straight away, but we have issues just like the proof of work model, the gas fee that we have on Ethereum, and sort of Solana having sort of its network shut down quite a few times with launches. But this is some really exciting news that came out from Solana's front, right? So the headline here reads, Solana's NFT marketplace, Magic Eden, launches gaming venture arm, right? So because we know play to earn and you can say a lot of metaverse sort of capabilities are surrounded around a good sort of capitalist fund. It's around a lot of investment, and this is pretty cool that Magic Eden, Solana's biggest NFT marketplace, and you know, fifth in the world when it comes to marketplaces, just below OpenSea, just below Rari and other sort of platforms. Magic Eden comes third or fourth, and in the future we'll see this thing really game up because there's quite a few projects on this. So let's carry on reading this. So it reads out, the leading Solana NFT marketplace doubles down on Web3 gaming with Magic Eden Venture, plus the launch of in-game storefront. So this is pretty interesting, like the quotes that came out of the founders of Magic Eden. So I want to kind of focus on that. So the brief is, Magic Eden, the top Solana NFT marketplace, has launched a Web3 gaming investment arm. Magic Ventures aims to make strategic investments and onboard developers into Web3 via Magic Eden's infrastructure. So thus far, like, what's happened is whenever these sort of projects have come through, they have turned out to be a short-term sort of pump, right? And people look at them as sort of a pump and dump, and that's something that Magic Eden and Solana want to sort of move away from. So this is Zhao. So Zhao is sort of the guy behind Magic Ventures. This is his sort of statement here. So he goes here, Zhao told Decrypt that Magic Ventures investment will be purely strategic in nature and provide support for developers on NFT powered video games. Video games, guys. Now we're going into the metaverse, right? We're going into the many sort of RAMs and hard disk spaces on PCs and PlayStations and Xboxes. This is how we sort of enter that field. So this is pretty insightful what he says here. So he says here, we're not thinking about returns, right? So this is way more than where VCs. So VCs right now have been getting a bad name recently because they've been known to dump projects just when they sort of reach a 3x, a 5x, a 10x. But what they're saying here is we're not trying to bring in a pump and dump. We're not thinking about returns, right? Never have, and never will. It's just to align our partnerships together, right? We truly want to be the go-to partner for these developers. What they want to do is they want to bring in developers from all these sort of gaming ventures when it comes to NVIDIA, when it comes to AMD, Athlon, when it comes to all these sort of big names like EA and Sony. They want to bring those creators, those developers onto their platform. And most times, a lot of investors have seen themselves to move away from investing because they see prices dip really hard. So they're trying to change the sort of, you can say, circle here, right? So this is a continuation of the quote. So it says here, developers can focus on one thing that they know how to do, which is to build great games. We'll help them to take care of all the Web3 elements and to help them onboard into the ecosystem. So this is something very, very different. This is a different sort of change of tone that I've seen happen a lot, because most things like, you know, all these IDO launch pads and these marketplaces, especially things like OpenSea, have been sort of a pump and dump, and then people are holding secondary prices and really holding on to those NFTs. Here we're seeing a complete different adoption, a different lookout, and they want people to actually join. They want developers to join up and be able to just worry about building great games and not worry about their token price falling. So that's really, really bullish news. Whilst we're in a bear market, things like this is the thing, guys. Like in bear markets, that's when real utility gets built, and things like this is a positive move, right? Magic Eden launching gaming venture arm, so now we're gonna see games. So yeah, it's looking really, really good on that side. Now the next thing I want to kind of show you is Grayscale. Grayscale was in the news quite a bit last year with their sort of Bitcoin ETF applications and their investment into Bitcoin. So they were looked at as Bitcoin maxis. Recently, what we're seeing is something different. We're seeing that they're diversifying their portfolio in many different alts now. So the headline here reads, Cardano, Solana, Polkadot, and 4 more altcoins are top smart contract platforms holding for Grayscale, right? So Grayscale have enhanced their portfolio a little bit. So it reads here, in a report, Grayscale says its GSCP XE fund, right? Their E fund has allocated funds towards Cardano, Solana, Polkadot, and several other Ethereum competitors. So this is what it reads out. So their current portfolio reads out 31% in Cardano, 25% in Solana, 13% in Polkadot, AVAX 10%, Polygon 8.4%, Cosmos 5.2%, and Algorand at 4.37%. So this is pretty awesome that at this sort of bear market, you have big hedge funds like Grayscale that are basically really diversifying, and then basically they further diversified in real alt projects, things like Uniswap, right, at 56%, MakerDAO, Aave, CurveDAO, AMP, Compound. These are projects that we see real diversification take place. And so it reads here, Crypto Titans also made changes to its digital large cap fund by cutting out 5 tokens. So let's read this out. So Grayscale has adjusted the digital large cap fund portfolio by selling certain amounts of existing fund components in proportion to their respective weighting. As a result of rebalancing, Bitcoin Cash, Chainlink, Litecoin, Polkadot, and Uniswap have been removed from the large cap fund. No new tokens were added to the digital large cap fund. So we're seeing a lot of diversification take place on the Grayscale. So I'm looking forward to like what their ETF applications are going to be now. I mean, they did put out a Bitcoin ETF, and that's what sort of pumped the markets in the first place. If we remember, the first pump that came on the all-time high of 68K came from the ETFs being sort of validated, and Grayscale's was one of them. So now I want to see if they sort of diversify and have ETFs with like Cardano, Solana, Polkadot, and other major players in DeFi. So that's great news. That's great news on the Grayscale front. The other thing I want to basically talk about is accumulation, right? So Cardano just recently went through its Vassal hard fork. Just like we've seen the London hard fork, the Berlin hard fork previously with Ethereum. Cardano is going through its hard forks as well, and this will allow the mainnet to handle bigger traffic, bigger transactions, like bigger counts, many different volumes, of accumulations when it comes to buying tokens, and especially when we've seen launches. I mean, we followed the Sunday Swap launch not long ago, and we saw Cardano sort of mainnet sort of crash from there, right? So Vassal hard fork is quite big for things. So what do we see here? we see a big scoop of 79.1 million ADAs being taken, you know, from the sort of sharks and whales, I would say. So people are actively accumulating Cardano at different levels. So these accumulation phases, as we see, they're meant to be a place of many whales and many new players entering the market, because when people enter the tops, you see they sort of struggle. But when there's an accumulation zone, as we see here with like 41 cents, 45 cents, this is a good place for sharks to enter. And sort of the metadata is sort of following that up. And we're seeing huge volumes enter and huge orders come in on the mainnet. So that's pretty, you know, bullish news on Cardano. And honestly, Cardano to me is going to be in that $1,000 token in our future. It's going to by 2030 we will see this at $1,000. So when it's currently at 50 cents to $1, it's a good idea to accumulate these projects, especially Cardano. So that's big news that the whales are accumulating Cardano. Let's continue. This was big news that came out of Switzerland. So Switzerland has a post office, and the post office is starting to take crypto payments, and this is pretty big. So Swiss Post banking arm, so the post office in Switzerland, in-house crypto custody platform. Let's sort of expand here. So Switzerland's fifth largest financial institution is set to develop an independent cryptocurrency trading and custody service for its clientele. Now finally people will be able to use the post office and throw their deliveries and do their post, you know, when it comes to B2C or B2B, but they can do it in cryptocurrencies. So let's read a bit more here. So Switzerland's post office is set to onboard cryptocurrency trading through its banking arm, Post Finance, as users' appetite for custody grows in the country. Some 2.6 million users that currently bank with Post Finance, the fifth largest bank in the country, are expected to be able to buy and sell Bitcoin and other cryptocurrencies through an in-house trading and custody service in the next 2 years. So this is really big news, guys. Like this is the first time we've seen a post office in Europe take up you know, tender in Bitcoin and other different tokens. So let's read a little bit more here. So here's the Italian-speaking Swiss town of Lugano, as we know is becoming the sort of DeFi capital very soon, is the most recent region to announce the acceptance of Bitcoin. Yeah, so Lugano is a city in Switzerland that took Bitcoin tender. They took Bitcoin tender, they took USDT and LVGA tokens. So that's pretty cool, as the recognized means of payments for tax, public service, and tuition fee for students in a partnership with Tether. So this is pretty big news, guys. Meanwhile, the Swiss central banks has had a mixed attitude towards the development of central banks digital currency, so like CBDCs. So yeah, there's the CBDC sort of conversation happening in Europe quite a bit, but this is really positive news that the Swiss post office is going to be you know, be not just considering but giving its customers, its clientele, the sort of option of paying in Bitcoin and Ethereum and, as they say here, USDT, Tether. Big news. Let's continue, guys. Let's continue. The next thing I want to cover is the, you can say, job creation market. As we see in traditional finance, we sort of focus on job creations quite a bit on our economic calendar, and we always keep our eyes on the numbers, especially when it comes to sort of businesses and sort of accumulations of SMEs and stuff. We always keep in line with the economic calendars. We always keep an eye on how many jobs get created. So we keep an eye on things like CPI and FOMC to see how many in non-farm payroll terms, how many jobs get created in the market, and because that sort of supports the industry. It supports this, you know, the interest rates and all the sort of accumulation of assets. So what we see here is pretty interesting. Something unique's happening in South Korea. So let me read a little bit from here. So it reads out here: Korean fintech giant plan to create 10,000 jobs, Web3 jobs, amid bear market. So Dynamo, would open offices in major cities and create about 500 new startups focused on NFTs and metaverse. This is unique, guys. Whilst the bear market's happening, whilst the world is going through its climate of, interest rate hikes in America, and same thing in the UK, the same thing in Europe, we're actually seeing huge crypto adoption happening and real jobs getting created. So it's pretty, this is really, really bullish news. So let's read a bit more here. So it goes here. Dynamo, a major fintech firm in South Korea that operates crypto exchange Upbit and several other blockchain and securities platforms, is planning to invest 500 billion won, that's around $380 million, to create about 10,000 new jobs, Web3 jobs, in the next 5 years. So let's take a few different quotes from here, So it reads here, Dynamo has already invested about $67 million since 2018 towards blockchain-centered firms. So this is a statement from the Dynamo CEO, Lee Sergo. So what does he say here? He says here, we plan to strengthen the competitiveness of domestic industry through an active investment and creation of jobs of the newly growing futures industries like blockchain, non-fungible tokens, NFTs, and the metaverse. So really, really positive news, guys. Like, this is how the domino effect starts, especially in Southeast Asia. when a Korean firm like Dynamo starts to announce that they're creating 10,000 jobs in NFTs, in you can say the metaverse, that's pretty positive. That's really DeFi like. So that's the news in South Korea. Let's continue. Since the three arrows sort of like downturn took place, and like all those sorts of things happened, in the background with sort of three arrows and their investments, they finally started to tweet and give us the legal side of things, and giving us a different face to things. So I'm gonna let the title here sort of represent what's going on here. So it reads here, Three Arrows Capital says cooperations with liquidators met with baiting, right? So legal counsel of the embattled crypto fund 3AC said the firm's founders and their families received threats of physical violence. Guys, this is what happens in bear markets, especially when people lose a bit of money, right? Let's read a bit more here. So it goes here, 3 Years Capital's co-founders Sozu broke a month-long silence today, taking to Twitter to post screenshots of a recent email from Advocatus Legal LLP, the law firm acting on behalf of 3AC, right? So this was the letter that was sent out to investors. It's pretty demeaning, So I want to read it out to you guys here. So it goes here. I refer to our exchange of emails below. It has come to our client's attention that you have made an application in the United States of America alleging that they have not been cooperating with you in meaningful ways, and detailing some of the discussions and the manner in which we had them on the 8th of July. Please let us know if you stated court filings that we explained that our clients and their families have received threats of physical violence and have had to field queries from the Monetary Authority of Singapore in the last week. So yeah, guys, like families and friends of these sort of firms and in DeFi have been going through a bit of threats, and this is what happens in sort of bearish markets. So it's important. I like the fact that Zosu's come like publicly with these sort of letters. So that's the news there, guys, on basically the 3 Arrows Capital hedge fund and what they've been doing in the background, what they've been facing, what their families and friends have been facing in the background, right? So that's the news on 3 Arrows. Let's continue. I've not done a hacking sort of news in a while, and I'm glad I didn't. But like something really big happened on Ethereum recently. It wasn't as big as those big hacks that happened on sort of like Axie Infinity and other sort of places, but this is still quite big. Like, this is what happened here. So hackers nabbed $8 million in Ethereum via Uniswap. Phishing attack, right? After gaining access to Uniswap's liquidity pools, LPs, via malicious airdrop contracts, hackers stole more than 7,500 in Ethereum. This is quite big news, guys. So what happens is, when we're using Discord, when we're using these sort of websites, someone sort of hacked into Uniswap and did an airdrop announcement, right? So the airdrop announcement was that you get 400 Uni tokens, and people fell for it. It was a big phishing scam that took away about $8 million away from the market. So let's continue here. So a phishing scam offering a fraudulent airdrop managed to rob Uniswap users of nearly $8 million in funds. The phishing scam promised a free airdrop of 400. So we've already been through this. You can say airdrop. A couple of years back, when Swap did a big airdrop of 400 Uni tokens. So this is what came out. So the phishing scam promised a free airdrop of 400 Uni tokens, worth approximately $2,200. Users were asked to connect their crypto wallets and sign the transactions to claim the malicious airdrop. Upon connection, the unknown hacker grabbed users' funds through a malicious smart contract. To date, more than 74,000 wallets have interacted with the phishing scam smart contract. Guys, like 74 poor folks, according to the data from Etherscan.
When did this happen?
This happened a couple of days back, man. It just happened a couple of days back, and it's quite big. Like this thing is shocking that people fell for this. People fell for this, man. Like 400 Uni tokens were offered as an airdrop, and 74,000 wallets interacted with that. So this tells you like you have to be very careful. Do your own research, whatever you get into.
Well,
so yeah.
Also, I highly recommend that you guys have what we call a burn wallet.
Yes, sir.
Have a wallet that if you think is something, and put a tiny amount of money in it. It doesn't have to be a lot. Put $30, $40. Enough that you'll notice if it's missing. But and then connect with that wallet first.
Exactly.
And then watch the contract.
Exactly. Because you never know.
That's the way to go.
You basically save.
You always do that, but if.
Oh, I'm sorry about that, Chang. Repeat that, please. I cut you there.
I said if it's not all that need to do that or want to do that, but if anytime anybody claims any of these hot button issues, basically, it's free. Use a burner wallet because it's probably not free. Secondly, hell yeah, dog. How do we do this? No, I'm kidding. But yeah, always take everything in this industry with 2 or 3 grains of salt. Remember, there's no regulation, and all of the fucking scammers have figured out how to interact with this contract, because it's not. If you're already a coder, it's not hard to learn how to use smart contracts and EVM stuff. So like I don't fuck with E anymore.
Exactly, man. No, that's words of wisdom, man. To always use a burner wallet, to always do your research. If it's free, it's probably not free. That's how I see it.
And revoke perms, dude.
Yeah.
Go into your wallet and it's all over DeFi that can help you do this. Revoke the permissions of websites that you're not using anymore, because it could be a protocol you used a year ago. Some little yield farm aggregator, could have a breach, and if they have permissions to pull anything from your wallet, well, and it gets breached, they will pull everything from your wallet.
Agreed, man. Agreed. Yeah, man. This took place on the 11th of July, so just a day ago. So 11th of July, hacker deployed a malicious smart contract, according to Etherscan. Notably, the code was not verified for the smart contract deployed on Etherscan. Something most legitimate projects do. Interesting. So this is something else that we have to see. We have to be able to, verify the deployment on Etherscan. So this is something the smart contract didn't do, and this is something you can follow through with. So the hacker wallet gained nearly 7,573 Ethereums from the exploit, according to analytics. So let's read further. So it goes, that's big, man. Huge.
I mean, that's almost worth the karma.
Yeah.
Fuck.
Yeah. Exactly. It's crazy. It's a lot, man. So it continues here. this was a phishing attack that resulted in some LP NFTs being taken from individuals who approved malicious transactions, said Uniswap creator Hayden Adams. Totally separate from the protocol. So yeah, so like someone like the co-founder, you know, Hayden Adams had to come out and really educate folks that you know, you have to do your verifications, man. So yeah, this is what happened, man.
I've seen guys who have been in DeFi since the very beginning. I mean, since the first EVM DeFi protocols were coming out in late 2017. I have seen guys who do this, who write Solidity, who are system security certified, right? Like they have like certifications in system security, like they're cybersecurity experts. They have fallen for this kind of shit, and they have fallen for website phishing, where you connect your wallet and it's has you sign something and you think you're on the Uniswap proper website, but it's not the Uniswap website. I mean, these guys are good. They're tricky, and you know they'll put in the effort to where they look and seem exactly like the real deal, but you know they aren't. So
yeah, man.
URL.
What
Bookmark the real URLs.
What I think, Chang, is like what happens is people like look at the website, they look at the design, and they're like, "Oh, this is legitimate. You know, this is legitimate. This is Uniswap.
Yeah,
it's got everything. It's got the button. It's got the swap. It's got everything that looks."
Uniswap has said from the beginning, bookmark the proper URL and then double check it and only interact with the link that you have bookmarked. Do not click on links. Do not. Let me reiterate this for everybody in here. Do not click on links.
Do not click on links.
Ever. Don't click on
links. I'll add to that a little bit, Chang. Don't Google anything and then click a link on Google. People think that's safe too, but it's not.
I agree. Totally agree. Info.uniswap.org. That's the only website that you should be going. You shouldn't be Googling Uniswap, because I'm sure the next 10, 15 of those sort of Google searches are, you can say, spyware and malicious attacks. I'm sure of it. I'm sure down this sort of Google page there are
every
misspelling. If it's Uniswap. Say that again, Chang. Sorry, you cut out there.
I just said every misspelling possible.
Exactly. Be careful, man. Be careful. So yeah, guys, that's how I want to end this this sort of, you can say, news sort of outlet. I think it's important to always keep secure and not fall for these things. Do not click link, to always check the URL, to do your due diligence, to not basically go through Google, understand the link, bookmark the link. Always keep safe, because you will always get the opportunity and the FOMO to basically fall for something like a 400 uni tokens. But if you ask someone in DeFi and he said, "Oh, this took place 2 years ago," what are you talking about? Most probably it's a phishing scam. So that's it for today, guys. Like, I think that's
to be fair, 2 years ago I made $11,000 off of a 400 uni or whatever off of the uni token drop. So you know, it's there, but trust me, if Uniswap or one of these protocols did one of these drops, it would be all over the news. The DeFi, like the crypto news networks.
Yep. We actually, what we would do, is like whenever these airdrops used to come, we used to verify it with developers and in communities. Like, we'd find out, is the official Twitter talking about it? Have they posted a Medium article describing the airdrop and why they're doing it and stuff? So
then you let someone outside of the community do it first.
Yes, sir. Exactly. You get some reviews, huh?
Yeah, and you're like, what? You still got all your ETH? Okay, it's probably
major key right there. Yeah.
Let other people make the mistakes.
Never be the guinea pig.
Yeah.
Exactly. But I like the Chang and Taylor. I like the idea of using a burner wallet. Could you expand on that, Taylor, Chang, any of you? The burner wallet thing.
I have several burners.
I have 4.
4? Wow.
Yeah, and
Yeah, and I layer them according to, the value of the asset that I'm going to be using on that wallet. So I've got like a pure degen wallet that's just crap. If I'm going into a meme coin or something that might turn a rug pool or, something like that, that's the wallet I use. I've got a wallet for, kind of my large cap NFTs, wallet for the, pre-mints and stuff like that. And,
I have a personal Gnosis safe where I have three different wallets that I have connected to that, and I have to use 2 out of those 3 to sign a transaction for anything to leave that wallet, that Gnosis safe. So like I personally, like my whole it's difficult even for me to remove that.
Wow. Yeah, man. You got to do your due diligence. I don't care how many levels of security you put into it. It's only going to benefit you. So, yeah, guys, appreciate it.
The long and the short of it is there are bad actors out there, and they are trying to get you. Like, it's not a conspiracy, legitimately.
Yeah. One piece on cold storage too that I would suggest is whenever you do get to the point where you've got cold storage, those wallets for that hardware wallet, only use that for sending and receiving. Don't interact with any dApps or any exchanges.
And only buy those from the manufacturer.
Yeah.
Don't ever buy a hardware wallet secondhand on Amazon, anywhere. Never. Only buy them directly from Treasure.
Yeah. Never from eBay.
And don't even give out. I've gone so far as to I don't even give out the public address to my hardware wallet. So the only sending and receiving that goes on to and from that wallet is from my other wallets.
Right. Exactly.
Yeah.
Interesting. So yeah, I would say if you're buying a Trezor, buy it from Trezor's official website. Don't go through Amazon, because this happened to a friend of mine. He basically tried to buy a nano ledger from eBay, and even though I want to tell you this story. It's pretty bad. It's like, I'm like, dude, do not be cheap with security, right? I warned him about 5 times, and then he doesn't listen to me. He buys it, and we must have airdropped him like $300. He calls me. He goes, "Z, I'm in a crisis." I'm like, "What happened?" He goes, "Dude, that nano ledger was a malicious attack. Whatever was there is emptied out." I'm like, "Yeah, buddy."
Wow.
Be careful. Luckily, it was only $400. Imagine if it was $10,000.
Really save $80,
Yeah.
$80 cost you your life savings.
Yeah, man. Yeah.
There are things to be cheap about. There, the things that you aren't cheap, like whenever you like, don't cheap out on your locks on your house. You don't buy cheap ammunition for your personal defense weapons, right? Like, there are certain things you don't do. You don't cheap out on the storage cases you use for dry goods, right? Because otherwise you get weevils and worms and shit up in your flat.
Exactly.
It's all examples of security, and furthermore, what you could do is I have a friend who, what he does is he has a laptop that never goes on the internet, and in that laptop is where he has a bunch of different security key files stored, and some of his wallet apps or whatever that never touches the internet, and then to get access to those keys, he has another key like a JSON key on a thumb drive that he has 2 backups of, and to then open up the file on the laptop that has the JSON files for his wallets that are on another hard drive that has one JSON file locked to those files. And you can even it's just he's got layers and layers of security. So whenever I'm like, "Hey dude, I need you to send me a transaction," it's like, an hour later I finally get it. But
I can imagine.
But that dude's never. So
yeah, man. I don't think I've ever been hacked yet, but I've been somewhere where I've like sent $1,000 to the wrong wallet by just getting an alphabet wrong or something. Like that's the most I've ever
Oh yeah.
lacked. I'm sure we've all done that in the past. But security, like I'm very paranoid now. Whenever like I'm sending someone something, I don't just check it 3 times. I see the address like 5 times. If I'm gonna click a link, I see it 100 times. I ask an opinion about. I get very paranoid with these things. But it's important.
Dude,
It's important to be
dude,
paranoid.
you wanna know about the scam of all fucking scams?
Yeah, yeah,
I just got tapped because I was out
yeah,
to up some more capital for some projects I'm raising for.
yeah.
And I talked to a guy, and he's like, "Well, actually, I'm raising money for something outside of blockchain." And apparently,
Yeah.
there's a whole system with secret sauce that I'm not allowed to know.
Hmm.
But they were like trying to tell me that I should go contact some I know to deposit $3 million minimum into an escrow account, and they'll from like J.P. Morgan Chase or Barclays or one of the top 5 banks, and in 90 days to secure the funds, right? So
Yeah.
because in 90 days they're going to give me back the original deposit plus 200%.
Oh wow. Oh wow.
Yeah, and they're like, so, and the way you, and if we aren't able to do that, you'll have your letter of credit that you can monetize with the bank.
Mm-hmm.
I'm like, okay, this sounds like a swift, like bank transfer fraud, and you know, and as I'm going into it, like they're introducing me to like people using their real names. These are real people
Wow.
in the United States, and
Wow.
like. And then I do some research on one, and he's like, "Oh, I'm the money man, and like I've been on all these publications, and I used to have this radio show and all this other stuff, and so you know I'm legit."
Wow.
And then I do a deep dive into some SEC stuff, and I find out in 2018 this dude got hit with a 800 basically
Wow.
$47 million from like he basically was the recruiter going out and finding people to like old people to deposit their fucking life savings and retirement funds into this investment company.
Mm-hmm.
It was just
Wow.
a giant Ponzi scheme, and he
Wow.
made a couple million off of it. And I'm like, so, you know, like it's big enough and it's bad enough, and I'm like, oh, this piece of shit was stealing from old people. Like, oh, okay. And even the SEC filings, they straight up said like he's likely to do this again. Like,
Yeah.
in the SEC filings. So I called the SEC. I had a conversation with an SEC agent today for the first time in my life, and I was like, damn. And they're like, so what do you do, and how did you get into contact with him? And I'm like, I don't really want to tell you. Like, nothing I do is illegal, but like cryptos that, like, you know, like,
I don't answer questions.
I don't answer questions.
I will not confirm or deny.
Yeah, I'm not a real. I am nobody. Yeah.
Interesting.
So, yeah, I'm basic, but yeah, it's so. What it goes to show is that even at high levels of things, like everywhere, there's just fucking scammers everywhere.
Hmm.
And especially now that everyone's like worried about, you know, or has had markets crash, like, you know, the scammers are just getting more desperate, because the thing you have to know about easy money is it comes easily and it goes easily. So people who scam and pull basically cheap money, right? It's for them, it's cheap money. For everyone else, it's hard earned, but those guys don't. It's not like they're investing in sustainable long-term solutions. Like, they're trying to liquidate that shit into fucking assets that can't be traced as soon as possible. So they're buying stuff with it. You know, people who do scams, they buy shit with it. You know, and then they run out of money, and then they got to figure out, you know, how to make more.
Wow. 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 Wow.
So then they get hungry, and then the
Yeah.
housing market crashes, and all those fucking houses they bought with their fake money or with their stolen money, like, aren't worth shit. So they're over leveraged, and now they need to go scam more. So it's a vicious cycle.
It's a
So as
vicious
times
cycle.
get tougher, the scammers get more aggressive.
That's the problem, man. Like the human interactiveness is where like we get an endorphin hit, you know, when we earn something and we do a good deed. For them, like that $8 million, for example, here is like a big kick of endorphins and testosterone, right? So
Oh, it's huge. it's a big one because there's the rush of like, I did it, I got away with it.
Yeah,
And they
got away
feel
with
like
it.
they're smarter. They feel like they're smarter than everyone else because they were able to pull over on other people. And
Yeah.
you know what I mean? Like, the reality is most scammers are fucking stupid.
Yeah, they're silly. They don't know security. They don't know how to write a confirmation statement. I've seen all of that. I've seen so many typos, man, with a lot of these scams. Typos in links and in their names.
Even
And
this guy who was in investment banking for like 30 years, like the guy that I dealt with when I was doing a meeting with him, just to, because I'm like, let's see how deep this really goes, right?
Yeah.
So I put some time into it. The dude ended up showing me his desktop, and his desktop was like covered in documents. I mean, like 50, 60, 70, I don't even know, just like somebody who'd never heard of folders. And I just screenshot it. I'm like, I just screenshot his entire desktop and all of the names of all the other people that he's trying to scam. And I'm like, okay, like,
Wow.
here we go.